Hey, Saturday to all. It's Paul Walton from Cherry Creek Mortgage Company, Mortgage Market Insight on Saturday. So we're just going to do a quick week in review of where the market has been and then what's coming up this week. So Friday we opened at 104, closed at 104.03. Important that we actually closed above 104. We have reached new highs with the bond market, which equals the lowest that interest rates have been in quite some time, or ever actually, not ever, but. So going back to Thursday, our opening at 104.09, and we charged up to 104.22. So Wednesday, the same thing. We actually were above 104.25, and we hit 104.25. So 104.25 is a big line of resistance for us to stay above, and even staying above 104 is huge. So the higher the bond market goes, the lower that interest rates are. If we can maintain this, great. But this is all driven off of the euro fear. Greece has no leader. They need to cut more costs, more austerity. The same with Spain has big banking issues going on right now. So let's take a quick look to, well, before we do that, let's look at a 3-month view just so you can see going back to from May 11th to February 15th what that's looked like, and the big stair step up. And then if we take a max view, you can see where we're at, the highest that the bond market has been, even going back to 2010. So quick look to what's coming this week report-wise. We have core CPI coming in on Tuesday. Expectations are at 0.2%. This is a measurement of inflation. And you can see it's been choppy and down, choppy and down. So most likely it's going to probably come in somewhere in this about 0.1% would probably be expected. Higher, they're expecting it to come in a little bit higher, 0.2. If it shows too much, that could mean that we're actually seeing something actually happen. We have core retail sales on Tuesday also. Expectations are at 0.3. It's been 0.8, 0.9, 0.7, so it'd be nice if we could actually see this maintain a little bit. We'll have to wait and see where what that actually shows. And then jumping into Wednesday, we have building permits coming in. As you can see, going back to 09, 2010, and 11, building permits have been pretty low, but on a gradual build. So hopefully we can maintain that on Wednesday. And then housing starts will be the other thing. Hopefully we can maintain this little bit of an upswing as the market goes through. So those will be the two things on Wednesday. Moving into Thursday, we've got unemployment claims and forecast on forecast is going to be roughly right around the 370K, but you can notice this big spike up where it was low in February, March. We spiked a little bit, 362, 351. It was pretty low, and we're starting to see this upward climb again. So hopefully, for the economy's sake, we're seeing this actually drop or go down. And then we have Philly Fed manufacturing on Thursday also. There will be no news on Friday, and hopefully we'll see this maintained somewhere in the same zone too. But you can see how even in June 11th through September 15th, with the pulling out the 21st of June, it was south, and we're starting to see some solid improvement. Not like this roaring start that was making up for the huge pitfall in the weeks prior to October. So this is playing a little bit of catch up. So hopefully we see manufacturing jump back up. Be aware that the market emotion can change where the bond market is, equaling retreat or removal from the heights that we're at right now. And keep in mind that this is the highest that the bond market has been in the last 2 years, equaling the lowest rates. So have a great weekend, and I'll be back to you on Monday morning.